let me qualify my statements on this because I'm an investor in JP Morgan as well. I have a lot of respect for him. He may be one of the most successful banking managers in the history of that sector. However, that was an uninformed statement. And it was not helpful at a time when we're trying to drive regulation through two different bills on the Hill right now. I, along with many other private investors, have been spending a lot of time in Washington on this. Essentially what Jamie said there, he was talking his book. This is my interpretation. He feels threatened by some of this technology, particularly around payment systems, because banks make money transferring assets. It's a cost of friction in the system. And one of the only reasons that I invested in Circle, and I'm an investor in Circle, I'm supporting their initiative, and I'm a big believer in what stablecoins can do, is it's time to get rid of that friction. And it's not important that banks be protected so that they can make fees from that friction. When you transfer the US dollar into the Swiss franc to buy Nestle on the Zurich exchange, these banks add zero value. There's no value created in ACH transfer fees. If we could, there is a social mission here. That is a good thing, but it is not going to solve a different problem we have right now. The reason we're stuck in a very low momentum state in crypto and blockchain right now is the lack of regulation that keeps the institutional investor out of this space. For all the excitement about stable coins and Bitcoin and all the projects and Ethereum on down and Polygon and Miston and everything that's coming, the truth is that none of it is owned by institutions, zero. And so everybody likes to say, yeah, that's not, but sovereign wealth and pension that I service in the indexing business, and there's many people do what I do, we create indices so that they can invest capital. They are waiting for regulation before they index. And so if all that happened was sovereign wealth funds put 1% to 3% into maybe 6 different projects, it would definitely be some Bitcoin, there'd probably be some Ethereum there, maybe some Polygon, maybe a little Solana, whatever they want to do and what indexers would do for them based on market capitalization, that's $1 trillion worth of demand. But none of it is going to happen until we get some policy. And the truth about this is, and I'm happy to just say it the way it is, there are countries that are advanced. There are places like Canada where they allow broker-dealers now attached to accounts, and Canadians can do that. They've got millions of accounts open now. So we should all support the initiative of everybody, and there's other people involved in this. You shout out to Sheila Warren and Perry Ann Boring, who spent countless hours educating legislators on the Hill. Their missions are important, but there's a lack of knowledge with the government that we have to get over this hurdle. So even if just stablecoins, that one thing got policy. And remember, when I go up there, I keep telling these guys, it's just software. It's productivity software. It's not scary. If you buy Microsoft for your office and you're typing on Word, that's software. That's a productivity tool. A stablecoin is just software that allows for more productivity and transfer of assets at a much lower cost, much more productively. Because they were tested and they didn't work. And that's an important way to build a nascent industry. So it's the litigators will litigate over the assets and the lawyers will sue everybody. And that's okay, because now the remaining players are being strengthened by the fact they're still in business. They're able to raise capital to the extent they're doing that. And the idiots are gone. What's wrong with that? And I think we start now, even though we're in a crypto winter, at a much better place. And I think the fact that they even woke regulators up. When you lose $60 billion, mind you, it was decentralized, so a lot of it was outside of the US. That's maybe good.
That's a good thing.
And look, you got to feel sorry for the pioneers that got the arrows in the back, but they were idiots, so that's okay too.
It's a good thing when the regulators are waking up and they're talking to you. They're talking to folks like Sheila Warren over at CCI, Perry Ann Boring, over at Digital Commerce, Chamber of Commerce, all of these folks, and yet there's a stall. Are we going to see movement before November 8th? That's the question. We're all waiting. What's the bet?
I think it's, it's a great question, and I asked the same question to. I think those women are in different places. I mean, Perrianne is more negative than Sheila. I saw them both within an hour of each other, and I got two different stories. So and they're the closest to it in the sense that they spend so much time. They won't do that until there's regulation.
There's no compliance infrastructure at the moment.
And they are getting ready for that to happen. Now, if all of a sudden stablecoins backed by US dollar were regulated entities, that would open up within 90 days. And so as an investor, I say to myself, do I position myself now or do I wait for the regulation? Because when in a nascent industry, and I happen to believe, and I've said this multiple times, this sector will be the 12th sector of the S&P in 10 years. It will be. As an indexer, I put up to 20% in a sector. So just like I would in energy or just like I would in tech. So why not position myself now? I'm not going to get it right. It's volatile as hell. And some of the stuff I've invested in is going to zero, but not all of it. And so I think I'll do quite well. Here's what I've come to. I've come to this realization. If you ask them where they want to work, these are the brightest men and women on earth. To get into MIT, you basically need a perfect math score. They don't care what country you were born in. You've got to be the best of the best. And some of those dudes are very eclectic people, I have to tell you. But they don't want to work in manufacturing anymore. They don't want to work in the existing 11 sectors of the S&P. They want to work on the chain. They believe that the biggest opportunity for them personally is to work in this nascent space that, and the analogy would be back at the beginning of the internet when only pornography was streamed. That was it. We're at that stage now. And so my argument is to any investor, you can't pour that much intellectual capital into a space and not expect extraordinary outcomes, because those are the people that are going to redefine industries using this technology. I believe that, and I invest in them. And that's why it's good to put money to work now, because every day another cohort comes out to invest in this space. In managing the decisions on which projects to invest in, because I'm very fortunate, my deal flow is insane. I see everything. And I have to disclose, I'm a paid spokesperson to FTX and a shareholder there too, because we mentioned them, and big advocate for Sam because he has two parents that are compliance lawyers. If there's ever a place I could be that I'm not going to get in trouble, it's going to be at FTX. So, they're great people, but he gets the joke on compliance, which is why he's working so hard to get regulation. But having said that, picking those projects is really an interesting job because I look for utility. I'm looking for, I think Jeremy mentioned in his keynote, we've got to get away from the speculative price of an asset here. We've got to find reasons that it gets embedded into the economy. And so I'm interested in solutions to